Hi, everyone, and welcome back to AI InterConnect, the podcast where we speak with founders, CEO, investors, and thought leaders who are building the next generation of technology companies. I'm your host, Laurent. The goal of this podcast is simple to have real conversation with the people building companies in fintech, proptech, AI, cybersecurity, and the broader innovation ecosystem. No sales pitch, no rehearsed answer, just an authentic discussion about what's working, what's challenging, and what the future looks like. Today, I'm very happy to welcome Alessandro Greco. And Alessandro is the founder of Sigma Strategy. He has worked in quantitative trading and financial infrastructure with companies such as BlackRock and Binance. And today is building new tools at the intersection of artificial intelligence, financial markets, and investor intelligence. He's also developing a platform called Personal Trader designed to help everyday investors understand market using AI. Alessandro, welcome to the show. Very, very happy to have you here.
Perfect. Thank you very much, Laurent, for the introduction. It's an honor to be part of the podcast, and I'm happy to have this conversation with you. And I think we can go through many, many interesting points of how AI can be employed into everyday life and into the financial markets in particular.
Definitely, and I'm excited. Alessandro, before we talk about Sigma strategy and maybe personal trader, I'd like to start with your story. You work in quantitative trading and financial markets, including at BlackRock, which is one of the most sophisticated investment environments in the world. How did you originally get interested in markets and quantitative finance?
Yeah, thanks for the question. So, honestly, it all started with what is a genuine obsession for understanding how the markets actually work. It was in beginning like understanding how economy actually works. Then it became an obsession with understanding how the markets actually work. Not just prices go up and down, but actually the mechanisms underneath the system. I studied economics of finance at the University of Bologna and then financial engineering at the HEDEC. And, where I in that kind of experience, I could go really deep into what derivatives are and how the machine learning can be applied to the markets. And I started seeing like the financial instruments basically has mathematical objects, if you think about it, as something that you can model, price, stress test. I guess once you see the systems in this way, it's a bit harder to go back to reading the news, I guess. But those are still like really important for, I guess, retailers. The quant lens kind of changes everything in the way you see and you look at it, and understanding like how they really works from an infrastructural standpoint. As being always someone that builds things, these kind of field allow me to couple finance and programming, and it felt the really right place for me to be into.
Yeah, I mean, you have an amazing background or studies and in quantitative trading, especially. You have seen markets from the inside at very large institution. I mentioned BlackRock and Binance. Many people outside financial imagine trading is something very fast and glamour. But from what I understand, a lot of it is actually infrastructure, system, and risk management. Is that a fair description?
Yeah, I think that's fair. So a lot of it revolves around the infra itself. It revolves around competition from that standpoint. So you have competition of market makers on who has the best infra, co-location systems. It is really important to be present into where actually the data center of the exchange, the place where the things happen actually is. It is a lot of a tech game in a sense, rather than what it used to be, I guess, in the 80s. You had these rooms where people would scream. If you think about it, I would like famous movies like Trading Places. Well, things changed a bit from those times, and they evolved into something else. And now, if you think about also the side, I've been on both sides, like on the exchanges side and on the asset management side. And also on the asset management side, you see really large asset managers really investing a lot into understanding data. If you think about the Aladdin system, the famous Aladdin system from BlackRock used for risk management, and that's kind of like where it all revolves around. It really evolved into something different, and risk management for really large entities is a really important thing. So it's something that I deem as being kind of like important. Looking at data in the right way and looking at risk management in the right way. Yeah.
I love the market personally, and I'm not an engineer, but I used to be a trader, and quant for me is something amazing to understand. Okay, let's talk about Sigma strategy. What was the original idea behind the company?
Yeah. So while I was working at Binance, I more and more often got the perception that there was a big divide between, the extremely complex system with which I was working in and what was the knowledge that the retailers, the normal people had of these. I wanted to kind of like fill that gap. And that's why I decided to build Sigma strategy in order to release my first product, personal trader. In a way, we mentioned no, BlackRock and the Aladdin system. Obviously, those are institutional kind of systems. But now with AI, real time analytics, AI assisted systems for summarization or having market insights can be something at the reach of retailers. Obviously, apps needs to be built for them, but that's something that they can start using. So I had the idea of building Sigma strategy in a way to kind of provide these kind of systems, these kind of products that they could use. Simplicity, I think, is the key for retailers. And the idea of having these financial markets democratized is something that it's something that spur all of it because I saw this big divide. I had people asking questions about this and this and that and how the markets worked. And the answers are really complicated, but with AI, they can be made simpler and better system can be developed for them to use. In a sense, we are kind of building at Sigma strategy an intelligent layer for the retail investors that many times they just disregarded. They were afraid of the markets because they didn't know them. And, you know, AI kind of changed that and allows them to have kind of more personalized, tailored approach.
Awesome, very interesting. What type of company typically come to Sigma strategy today?
Yeah. Sure. On the B2B consulting side, I have many of them are either smaller crypto exchanges or businesses into the crypto payments. They want to deal with complex financial products, derivatives as such, and they need a kind of a rigorous quantitative framework. So they need something to deal with, as we said, the risk of going through even doing like a crypto payment system. You have risk and holdings, and there's way more trading that you would expect just in even these simpler solutions. And so they want to integrate the kind of like risk management that it's appropriate for the crypto asset classes, for any asset classes. So mostly on this consulting side is not just chatbots or anything, these kind of AI implementations, but it's about generating real kind of analytical value from a risk management perspective. Maybe they also need help with derivatives regulation compliance. That's also something that could arise in Europe. And these are all problems that I've lived through when I was at Binance and solved from the inside of these major institutions. And there's a need of a bit of a technical depth to go through them. And that's something that they can find definitely a Sigma strategy.
Interesting, very interesting. During our pre-podcast conversation, you mentioned a very interesting idea behind personal trader. You saw a gap in tools available for smaller investors, especially in the southern Europe. Can you explain what personal trader is and what problem it solves?
Yeah, absolutely. For now, that's not kind of the final goal of personal trader, but for now, well, with kind of like the current evolution, it is can be defined as a portfolio intelligence platform in a sense, or I like to call it an investment companion. So the core idea is really simple. You have every retail investor that kind of deserves to understand their own portfolio. Oftentimes you have people being like, okay, I'll buy this ETF and this other ETF, and Nasdaq is S&P, and then the top 10 companies are exactly the same. And I think they are diversified. They're actually not. So that's also kind of a thing that you see often. They don't even, I mean, because people are doing the most different things and they don't have time for that. They're not even seeing that they're buying the same thing because they have the same holdings. So in a sense, most people don't actually know what they own. And in a sense, I decided to create that to I have a solution for that. Sometimes you're like, you don't have time to look at the markets and maybe you want a recap of what happened, or you want to know why this stock is moving in that direction, which news caused that, or what happened. In that sense, for a retailer, that's kind of like, I think, fair to know. And sometimes it can be with if one would have to use a broker and stuff, it would be a bit really complicated. Even like looking into these things, they don't know the real sector exposure that they have, retailers, and all these kind of things that are seems really quanty. But in the end, they can be understood simply with the help of AI, because correlation in the end, correlation matrices are something that they sound complicated, but if they are explained simply, they are actually simple. So personal trading, in a sense, aggregates the holding and market data and uses AI to generate a clear, personalized explanation. Obviously, this is not the final goal of personal trader. So with the right funding, with the right partnerships, what I want to get to is a very holistic solutions where they could potentially also with partnership with other brokers and orders actually, and an holistic kind of like management. Obviously, that takes time and that has to be evolved into a V2, V3 of the current app. But for now, it is an investment companion. And in future, it can be much more than that. It can actually be an advisor. It could be something like that. But that obviously need licenses and compliance. That's not what it is now, but that's the goal for this project in the future. Yeah.
Yeah, exactly. You said in the future, you mentioned the possibility of evolving the platform towards an advisory system and eventually trade execution. How far away are you to, do you think that vision is?
I think is not that far. It all depends on how things evolves, but that can come like in less than 1 year. I hope 1 year, less than 1 year. It's really close. It just on a matter of like growth, on a matter of licenses and so forth, so on and so forth, and funding. But that's from a technical perspective, you're really close to that. Now, just open a note on where I think AI stands at the moment. So you see many sensationalism, especially in X, on what AI can do. What we call AI is LLMs, and this is different from what I would call a harder AI in a sense. We will see, I think, many more other systems growing up in the close future, and those would be probably more adequate for actual harder stuff, like actually performing the trades and so on and so forth. I wouldn't rely on ChatGPT to perform the trades. But as I said, for summarization, advisory, market insights, that's something that I can suggest to use, not for anything else that is like completely left ChatGPT or whatever manage the portfolio. That's, I think, a bit insane, and better solution will be developed in future. That's also something what I would like to do. But for now, what we have in AI, it's really useful in order to give a new perspective on risk, a new perspective on understanding the markets to the retail users. So it's enough. But there is a lot coming in the future. Yeah.
Yeah. Do you see this primarily as a consumer product, or could it also become something used by professionals?
Everything can kind of pivot into B2B or B2B2C solutions in a sense. For now, I decided to focus on the B2C, but necessarily, or I think it's really interesting to also go into B2B solutions, because as I said, the B2C solution has to be really simple, and it has to do certain things. The UI has to be simple, but there are so many other things that I would like to do. And B2B is probably the most exciting business to be into, and there are much more interesting stuff that could be expressed into B2B solutions, more hardcore elements from a quantitative perspective, analysis of option data, for instance. That's really interesting, but that's something the retail thinks about in an esoterical matter. So in a sense, that could also be a possible exposure that Sigma Strategy could have developing B2B platforms. But that's something that this B2C product could be a starter and a launcher, a ramp towards also the B2B business in development of tools and so on and so forth. It builds naturally, I think, on top of what we're building now. The same intelligence that helps retailers could be, if you change the kind of inputs and you change the way you look at the data and you make it more complex, you can also have B2B opportunities. That's all about like the different data. As I said, you would use option data, you would use a bit harder data for the retailer to understand, and that would be kind of packaged for the B2B layer.
Yeah, it's very interesting. You said it would require a different type of AI, potentially reinforcement learning instead of just language models. What that B2B system look like,
Yeah,
if I may? Yeah, I know
absolutely.
it's still fresh for you, but I'm sure you have ideas.
Yeah, I mean, in a sense, it would work in a different way, as you said. So Now we have this retail facing platform, and you also see them like in the market. I'm talking about in the market. So brokers, robo advisor, neobanks, and they want to kind of enhance their offering with AI powered portfolio intelligence in a sense. And maybe on a B2B side, maybe they don't want to do that and they don't want to do it internally. So that's also a kind of a perspective. That's one kind of like client. That's what kind of like way the product could work. So offer to these kind of players that they don't want to develop it in internally, but they're not interested into that, but they want to have it. Second, I think there is a second more sophisticated B2B track, and that involves reinforcement learning for systematic and automatic trading strategies. So that's more relevant for prop trading firms or institutional clients. We also have like family offices, other smaller asset managers who want quantitative strategy infrastructure or quantitative strategy solutions that implement that. So that's an interesting option, and that's also a third option. I already said it. Like part of the prop trading, they could also actually be asset manager and wealth manager, and they would serve, you know, affluent, kind of like high net worth individuals, and they would need better tools to explain the portfolio risk at scale. In a sense, different kind of data this that comes into, but really similar models. Sometimes you see the implementation of RL, reinforcement learning, rather than LLM straightforward. But that's actually, the underlying sometimes is often the same that you have to retailer. It's just like the different kind of fine tuning, the different kind of data that you would use. Yeah.
Yeah, very interesting. I love to deep. What are the biggest challenge or the biggest technical challenges in building that type of system?
Well, they're not few. There's plentiful of them. And on the technical side, the reinforcement learning systems for systematic trading are just art. So oftentimes you have these solution, these RAL agents that you have to. Well, now we'll talk about like a bit specific, and this maybe can be difficult for more the naive listeners or like those that are not super expert. But you have different market regimes, no? And you have these reinforcement learning systems, and these reinforcement learning system, they tend to do one thing that is called overfitting, and which is good and is bad, and this is kind of a trade-off that you have to do, because if they don't overfit that much, it means they are not learning that much, right? That it's super simplistic, but bear with it. And if you need a lot of historical data to kind of avoid that overfitting. The ideal amount would be infinite amount of training data, but obviously that's kind of impossible to have. So it is in a sense, and you're kind of like finding an open research problem, because you have different market regimes. Maybe you train it on one market regimes, you can train it on multiple market regimes. There are different solutions you can have. You have maybe have your agent. It's really frustrating because maybe you have your agent learning really fast, but then you find out that it's overfitting, or the agent is learning really fast and then it's not performing when you take into account fees and slippage. Effectively, it is a really frustrating kind of like thing to do. It is an open research problem, not just for us, but for the field in general, like how to effectively avoid overfitting. And you have to deal with what is the infra, what is the architecture of the neural network that is, below the RL. So there are multiple things that you can change. You can change the RL algorithm, and you can change the actual architecture of the neural network that is below it. So multiple things that you can touch. It's like the same way you would think about a systematic strategy where you have multiple parameters. And now instead of changing the parameters, you're actually changing elements of these system. So it's kind of a dimensionality problem. On the product side, I think also, now changing topic, a bit easier one, there are challenges handling the data complexity of the multiple asset classes. So you have equities, ETFs, crypto, you have derivatives. These are high dimensionality data, and you have different brokers, different rules given, even when you want to do like automated trading, automated advice, and these are evolving. So in a sense, you also have to take a look at what compliance is, MiFID, the AI Act. One is actually coming also in June, if I'm not wrong. Building within those framework is actually a real consideration, and looking at the data, in the correct way is actually an enabler in a sense. These are not just blockers, but they are challenges, and going through it is like it's a way to kind of like get into the market. There's no way, kind of like no kind of shortcut through it. Yeah.
Yeah, amazing. If you look 3 to 4 years ahead, could we see AI system actually placing trades automatic?
Yeah. I mean,
or you always need a human in the loop?
I mean, systematic funds have already existed for a long time. Think about the famous RenTech fund, Renaissance Technologies from Jim Simmons. Like that already existed in that form. And I remember one time he said something on the lines of, "Some days I felt like a genius, for the machine they built, and some days I feel like an idiot." Like the markets are really a special beast because the markets are not a kind of like an esoterical entity. They are made of multiple players in a sense, and you have these and a bit technical in the answer. You have this thing called alpha decay. You ask like, will the humans still be there? Humans will still be there in building the systems that then will trade automatically. That will be not for everyone though, because one thing you said is, okay, you have to look at how many kind of elements there are in the market, and you have sometimes the pension funds, the asset manager, the family offices. Many of these still like a more, maybe the entity that is sending the trade is going to be systematic and automatic, whatever. But the entity with the mandate, so kind of like choosing what gets bought, it doesn't necessarily have to be an algorithmic system or a machine. It's not that it's going to be completely automated on the choice side, because most of the times, like you have these clients, they want to know from a human why the machine is taking the choice. Back to Jim Simmons, sometimes he felt like a genius, sometimes an idiot, because the system was acting obviously automatically. It was really lucrative, but maybe sometimes they don't like. Some clients don't like a really lucrative system that is also purely automatic. They want to know the reason why these choices are being taken. And in black box kind of solutions, it's harder for you to justify that. And back to when the initial point, when I said the alpha decay, you also have that. You maybe discover a pattern, you exploit it. Someone else also discovered a pattern. Your alpha, which is your edge, is going to decay through time. Patches are going to be fixed. Maybe the way you earn money was through an infrastructural bug or something like that. It's going to be fixed. And then you're gonna kind of like that alpha is going to decay, and you're going to have to invent and find out another alpha. So humans will still be part of it in many sectors, even in the systematic ones. And especially when I said like the family offices are more like tailored asset managers, you would still need a human component in a sense if they have that kind of style. With Gen Z, though, maybe there will be more reliance on AI. So it's a bet. I don't really know how's that's exactly going to look like, but I can see for what I've seen, it is a mixed solution with a really strong element of like the trading is going to be automated, maybe even the mandate, but I'm not so sure about that. It's going to take a bit of time.
It's amazing. Let's talk about the entrepreneurial side of for a moment. And building a fintech company is never easy. What have been the biggest challenges so far since starting Sigma strategy?
Yeah. I think, for founders and, kind of like AI companies today, the kind of like lessons they have to learn, it's essentially that, you know, even though you maybe spent like years inside institutions where there were certain kind of problems and you maybe understood the gap, it is gonna be a bit different how you approach that problem especially when you go from like something that dealing with like B2B being within the institutions, having to deal with the B2C. That's essentially a big jump. No matter the technology that is being implemented, no matter the solution, that's kind of a paradigm shift. The way people think, the way that people approach problems and your clients is going to be essentially different from when it was within an institution. So the first thing is like getting out there is not going to be easy. It's not definitely not easy, but it's exciting because you would be building something that people know about. There's a name. It's gonna be something that has a name. So that's the reason why I also decided to do that. Like actually having a solution that makes an impact, having a solution that helps people. But it's the problem understanding, like your ability of problem solving is going to be a really big advantage. But you're going to have to reformulate that. So basically, kind of change it and readapt it to a new kind of solution. The second lesson is there's a lot of technical credibility that has to matter in the business. Users and investor within this space can really tell the difference between someone who does understand the financial markets and someone that has just not really understand that. It's harder for retailers to know that, but with due time, they are obviously learning the lessons of kind of like blinking towards like more dishonest solutions and non-legit solutions that are plentiful of that. So you have to really fight around and across these kind of solutions where they try to get market share, uh, offering kind of panaceas or silver bullets. That's going to be also a tough thing. But you have to continue building trust in the financial services and be patient with the distribution. What I'm trying to say is that you may have seen other solutions that promises insane things like take a screenshot of the chart and I'm going to tell you where you have to trade. And people think that the AI is going to do that. And then they pay $30, whatever, just for that. And you have to be patient with the distribution. It's going to be different because you're not going to be kind of using that kind of same factor. That is something that AIs cannot do. That is something that probably is not really legit and is not really genuine. So be patient with distribution is probably the second lesson.
Yeah. You also mentioned that you're exploring venture capital opportunities for personal trader. What have you learned so far from speaking with investors?
Yeah. I've seen like there's a really first thing when I think about VCs and like if I would have to kind of give an advice to anyone that is like approaching the same thing, you have to think also in terms of geography. In a sense, you have, even though we should have a united market in Europe, you have different VCs doing different stuff in different kind of regions of Europe. And you're going to get a lot of interest, I guess, from VCs in Asia or in the US. But I think it's also important when you're approaching these to understand the location of your VC, because that's going to matter for which market is going to be the most important to you. That's one lesson that I can think about is like, really thinking about what's the location of the VC, where the funds are coming from, and where you're going to have to focus then moving forward. You see, um, Central and Eastern European and Southern European VC funds focusing on different things. Obviously, everyone that is in VC, in private equity, knows the verticals, knows the sectoralization of these funds, the mandates that they have. But I'm sure not every entrepreneur knows them. And that's something to look into. Like understanding the verticals of those funds is going to make it easier for you to kind of be more selective on like where you want to kind of like who you want to approach effectively.
Yeah, no, definitely. I mean, you don't want to miss that. That's important. Yeah, you have spent years thinking about AI and financial systems. Where do you think AI will have the biggest impact on the market over the next decade?
Yeah. Markets in general, or the financial markets, I think we can go through them both. Markets in general, there's going to be a lot of impact, as you can imagine. That's not like really easy to understand the services and every kind of solutions like these services, consulting, and so on and so forth. They're going to possibly be enablers, or they're going to be effectively also disruptors in a sense. We're going to see a lot of um, evolution and movements in the market. I'm thinking about recent headlines from Oracle, recent headlines from Amazon. We're going to see a lot of movements towards the direction of full substitutions with the use of AI and some step backs. So I'm thinking about like incidents happened recently last week at Amazon, and also um, kind of like layoffs that happen at Oracle. We're going to see a lot of that back and forth. It's going to move, I think, in waves in more and more sectors. The point is that that's not going to be, I believe, that's not going to be dramatic in a sense, because there always going to be a wave of like, or certain companies being like, actually there are limitations with AI, and certain companies promoting more of AI, but it's going to be effectively a good thing in the end, because if those things can be replaced, that means that there's higher stuff, more important stuff that actually human can work onto. So it's going to free up the space for that. We cannot be modern ludists towards these. We cannot be fighting the machines as some were doing during the first industrial revolution. We don't have to completely embrace and think about this thing as an artificial god, but it is useful to understand its power and its limitations. So in a sense, we're going to see a lot of these, and many sectors are going to be disrupted. The one that I think are going to maybe be disrupted the less is probably healthcare. But there's a lot of work being done there from a robotics perspective. So usage of robots within healthcare, and robotics is probably going to be the next big wave for AI. And that's why I mentioned the RL. RL is basically the computer vision RL. It's at the basis of that. It's a completely different problem from compared to LLMs. So those are interesting things they're going to see, like robotics, widespread use of robotics, and that's going to touch more and more sectors. Maybe that's a decade or more than that. But the thing, it's always easy to overestimate what this technology can do within 1 year. And like people always overshoot that. But then they undershoot what they actually can do in 5 years. So it can even be earlier than that. We're going to see something really interesting in robotics, if you think about it. So even those sectors that are deemed as safer are going to also be disrupted by these. But people don't have to think about it in a sense as a danger, something they have to be safe from, but an enable them. It's going to be something that enables them.
Yeah, no, definitely. Many people listening to this podcast are founders and aspiring entrepreneurs. Based on your experience so far, what advice will you give someone building in fintech or AI company today?
Yeah, I think about it actually. What you can, yeah, what you can look into understanding what you're actually building and in which market. Sometimes it's going to be really hard, almost impossible for you to create a completely new thing because maybe that's something that people still cannot understand. I'm sure you're right, and there is a need for that. But sometimes you have to look into what is people that actually do now, is already existing and has already existed, and how can that be improved rather than completely building something new? That's going to be an easier approach. I know it sounds more boring, but that's going to give you the ramp. It's going to give you kind of like the living space for you to then develop your dream product. But at first, I think you have to think about like what exists now, and now that can be made better, and now that can be improved. So that's what I did when I thought about personal trader. In a sense, I wanted to become, in the next 3 to 5 years, I wanted to become the platform that a new generation of European investor turns to when they actually want to understand, the markets. So, and that's something you'll be like, but there are many of those that are robo advisor here and there. Yeah, but they can be made better. They can become something better. And that's also something, it's also easier for you when you have to explain it to someone. What is the product that you're building if you have something similar to that? So that's something that I feel like I have to share. And I feel like it's an important way to think about the thing because you see many times PhDs and like people, really smart people, and they think about really novel solutions because they know that's the right thing to do. But maybe that's not the right thing for now. And it's going to be destroyed by someone else that doesn't understand your dream for now. So it's not about playing it safe. It's about playing it grounded strategically in a sense.
Yeah, no, definitely. Oh, there you talk about a personal trader, but if you look ahead for a few years, what is your long-term vision for that you have for Sigma?
Yeah. Yeah. Probably a lot of focus will go into, yeah, exactly this project, but in the future it would go in the real future. What will be really nice is it's actually to get into that development that I talked about, like the RL and kind of like these kind of solutions about like, deeper into trading, deeper into AI solutions, not generalized, because obviously when you think about generalized AI, there's a lot of stuff going into, biocomputation. That's something, it's a different field. It would be lovely, but I do something else. It is connected in a sense with the market. So if you find a way to have a biocomputation that is efficient enough to trade, that's going to be something really interesting to implement. So for the future, I really believe into these AI solutions, but they are multiple. You have biocomputation, you have different algorithms being used. You have Jan LeCun from Meta recently raised like 1 billion to develop his GPA solution, GEPA. And so that's going to be something that I want to be into. So kind of see how these AI solutions can get into the market, can make investment easier, either it be in a B2B solution or a B2B2C solution. And regardless, I really want to know how you can apply this to trading. That's why I'm into this business.
That's wonderful. Alessandro, thank you so much for joining us today and for sharing your story and your vision for our audience. A great conversation. Thank you so much.
My pleasure. It's always nice to have this kind of conversation. It's really important to discuss these kind of things and how the future will look like. And this is a really exciting field to be into.
Yeah, no, definitely, and one that I really much share and love. Where can people reach you or learn about your work?
Yeah, I kind of always invite them to reach out on LinkedIn or my sigmastrategy.ai website. They can also ping me there. Plenty of things. I also have a Medium blog if you like to read about market makers. So yeah, and also the personal trader app. They can kind of like check it out. But mostly, yeah, LinkedIn. I'm there. You can add me up. You can send me a message. Would be nice. Yeah.
Wonderful. Thank you so much for taking the time. Thank you, Alessandro.
Thank you very much.
And that's it for today's episode of AI Interconnect. And if you enjoyed it, share it with someone who's building the future, or better yet, someone who should be. And until next time, stay curious, stay creative, and keep building. See you very soon, Alessandro.